According to Bank of America Merrill Lynch, active mutual fund managers are betting more heavily on cyclical versus defensive sectors. Is this a smart move, or does it show that maybe some areas of the market are getting a bit overcrowded? Good question. I'm Brian Sullivan. Welcome to Trading Nation. Wald with Oppenheimer, Boris Schlossberg with BK Asset Management. Boris, I'll start with you. So they're betting on an economic recovery. They're betting on non-defensive names. Do you think it's been a good bet? Do you think it will continue to be a good bet?
I think it's getting to be a crowded trade. I think a little bit of this is probably wishful thinking, because at this point, I don't see too many signs of truly strong economic recovery across the board. Granted, labor conditions are quite good, but wages are just not there. Commodity prices themselves are not really signaling any kind of a strong final demand. And I think for all those reasons, I would be quite cautious about being overweight the cyclicals at this point. It may be a very mature move at this point.
Mature meaning about ready to top out, Boris?
Yeah, exactly.
Are you worried about valuation?
I think valuation, I think the fact that it's a crowded trade, and I think it's certainly ripe for a pretty serious correction. I'm not, mind you, I don't think this is the top for the cyclical sectors, but I think it's very ripe for a pretty serious correction that's going to flush out a lot of these late longs.
Okay, all right, Wald, we look at the discretionary side, we look at sort of the defensive side here. You can chart them both. What do you want to look at?
What I actually want to look at is the growth index, where I would say, to answer your question directly, Brian, I think this is a good idea. I think this market recovery, the overall cycle continues, and I think you want to have exposure to those cyclical areas of the market. And even valuations, I mean, you can make the case that it's actually some of the more defensive areas of the market that sport some of the more elevated valuations. Where I think it also very important what kind of cyclical exposure you want to own. And we generally want to own cyclicals less affected by oscillating interest rates and oscillating commodity prices. And when we think of that, we think of the growth index, which is going to be very heavily weighted in the technology, consumer discretionary, and healthcare sectors. And we can see this index on a relative basis is inflecting higher versus the value index, which is going to have more exposure to financials and energy and even utilities too. So I think this is the place to be. I think the rotation, it's not really a cyclical versus defensive call. It's a growth versus value call. We see the rotation going to growth. It still gives you that cyclical exposure I think you want to have. I think that's the high conviction bet here, Brian.
Okay, go ahead, Boris.
I was going to say, and that's exactly sort of the central thesis here. You basically have to assume 3% or better growth for this trade to truly work itself out. And I think that's a very too optimistic an assumption at this point. And that's why I think there's a little bit of a danger in being overweight that whole sector.
All right, Boris and Ari, thank you both very much. Interesting findings there from BAML, Bank of America Merrill Lynch, on cyclicals versus defensive. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.